everybody to the Finweek in Bratislava.
Tack.
If I'm not mistaken, it's the 8th Finweek conference and many more to go. So we declare this conference open.
What?
And I would like to introduce our first speaker, and he's representing the Ministry of Finance. He's the chairman of the Center of Financial Innovation, Martin Peter.
Hello. Thank you very much. Thank you for this opportunity to be the first speaker. I will be very short. What I want to say is to thank Finas and Finweek for, I think this is the, as you said, the 8th year of this conference. And I think it's, I think the only so dedicated conference to financial innovation. We are together with Finweek since the beginning as supporter, as partner, and I'm very proud of that because we try really to support financial innovation. We worked through a lot. In these 8 years, there were ups, there were downs. Also now the situation when somebody approaches me, it's not the best. I would say for the entrepreneurship and for financial innovation as such. But yeah, it's I think it's a long run. Also, this conference, it's 8th year, and everything what was done before in these 8 years, we did a lot. We improved regulation and processes. There is an innovation hub, the regulatory sandbox, and our cards that for the head of the National Bank of Slovakia. So yeah, there will be some successful stories. And as I say, yeah, if you want to run a marathon, it's called 2 kilometers. You need to focus your attention to the future today, where you will be running it, and you have to train. And regardless whether it's rainy or it's a blizzard, willing to go to run, and you have to train. Now, our goal is to support and create environment that is supportive. And yeah, there are some stormy days. There are periods where the circumstances are not just the best. But I really believe that the support and the support that is given by us, by the National Bank, by all the stakeholders, will bring us through also some worse periods, and will help us to create maybe stable and supportive sort of environment for financial innovation. And evidence of that is also this conference. So once again, I would like to thank to the organizers and hope that you will enjoy this. Thank you very much.
Thank you, Martin Peter. Our second speaker is Arkadiusz, representing the Polish Embassy in the Slovak Republic.
Morning, ladies and gentlemen. We have time, so now I need to know the price which to go see from China, some help and Polski. I wish to address something hillside and also points from Bratislava. Also asking me to share his upload for being able to join today. This she is now traveling to a very important business trip. Good morning, ladies and gentlemen. It's really a great pleasure for me and my point in Bratislava to once again be a part of the film Bratislava legend. Let me start by saying I have words of appreciation for those who actually read about this grant today. Fintech issued the association with Slovakia, as well as its counterpart on the other side of the for all of its Fintech organization. We really appreciate your job. Ladies and gentlemen, Poland really has a lot to offer in Fintech industry. Examples of applications, services, and other solutions will be presented here, so I'm not going to bellow that. It is worth noting, however, that an interesting part has taken place in Polish and Poland cooperation since we met here. The Slovak customers have finally been able to use PayPal while ignorance. I'm sure that Leak will soon be as popular in Slovakia as becoming my country, as it eventually has a chance to become a pan-European payment system. Ladies and gentlemen, I will need to share with you some basic facts about the Polish fintech market and its latest developments. In recent years, Poland has been experiencing a real boom in the fintech sector. The number of companies increased from 167 in 2018 to more than 400 in 2023. And this growth was driven by several factors, among them our general economic situation, what driving demand for financial services using new technologies, the changing consumer behavior accelerated by the pandemic, as well as the growing pressure to meet ESG standards. It is also important to know that Polish customers are extremely open to innovations in technologies, of whose the banking system has been the best example for years. Fintechs in Poland operate in 15 sectors, almost half of which operate in 3 areas: payments, financial management, and software inclusion. The best represented market segment is payments. Quite an important fact: approximately 45 Polish fintechs are headquartered in Warsaw. The city's talent pool of more than 20,000 experienced personnel includes IT, cybersecurity, finance, data analytics, engineering, business and management experts. In other words, there are over 20,000 available candidates in the fintech industry and your future employees in Warsaw. Who are the investors behind fintechs in Poland? Well, 60% of them are individuals, but in the case of 40% of entities, the majority shareholder is a foreign company, while domestic or foreign funds are the leading owners of 13% of fintechs. So there is still some room for your attention. Ladies and gentlemen, I would like to quote many numbers and facts. Comprehensive approach to fintech industry in a country can be found in a special report entitled "How we Fintech in Poland," prepared by the Fintech Poland Foundation. This is a must-read for everyone who is interested in the Polish financial market and also the fintech in Poland. Let me stop here and wish you a very productive, very stolen fiat. Thank you. Undersigned, Kancelai Arkadiusz.
Thank you very much. And before we continue, I would like to thank our sponsors of this event. And well, there we go. Partners. Ministry of Finance of the Slovak Republic, National Bank of the Slovak Republic, Visa, thanks to Visa, makes this possible. And then we have partners including Tekta, Golden Gate, Prosper and Pavlovich.
Please.
Thank you. I put another list there now. Thank you. Okay. The Minister of Finance, National Bank of Slovakia, Visa. And partners includes Tekta, Prosper and Pavlovich, EUBA, Clift. And we have supporters including Israeli Embassy, Fumbi, RBX, SK Finance, Bursa Central Papier of Bratislava, and the expo partners Lufthansa Group. And the main Mediani partners FX. So now we've thanked our sponsors, supporters, and partners. Now I would like to welcome my panel here to the podium. Dusan Jurčak from NBS. Welcome. Still coming. And can you see except that one? And we have Anniko Solvati from Hungary, National Bank of Hungary, attending online. Welcome, Anniko.
Good morning, everyone.
Look. Nicolas Peksa, former member of the European Parliament. Welcome aboard. Wow. Lucas Kowanda, also Czech Republic, Chief Economist at Trade Bank. Welcome. Peter Ivanka, account manager at Softec. Then we have Peter Palos, head of the financial department of the representation of Slovakia in the European Union. Good to have you on. And hopefully we also have Karl Bujuk, Germany, Executive Director of the Euro Association. Hopefully we'll have him here and it's going to work. So, welcome everybody, and let's get started. We are going to speak about the digital euro, central bank digital currency. Is it a revolution, or is it a threat, or is it a dud? I will add the last one here. The European Union has been working on this story for quite some time, and last year we discussed this question, and European Union representative said it's better that you take time and getting it right from the beginning. So that was the explanation why this project is not the fastest in the world. The big question is, what are the benefits, what are the risks with a central bank digital currencies and digital euro? And our panelists will try to sort out these important questions today. So I will start with the representative from the Slovak National Bank, and that would be Dusan Gruček. What do you see as the biggest potential benefit of a digital euro? Very simple, very straightforward question. No one needs to answer.
Thank you. Thanks for the invitation here. Thanks for the possibility to explain some topics which concerning actually the general public. Because as with every new things that do things, there's a lot of hoaxes, there's a lot of superstitions, there is a lot of secret messages, and digital euro is a typical example of such a situation. Perhaps later I will explain what changes what changed from the previous year. Anyway, if you asked if it is the revolution or the threat, I would not like to use the word the revolution. I would like rather use the word game changer. In the environment of the retail payments in the US. If we see the project itself, the product itself, we can clearly see some 4 different groups of participants. The first of all is the issuer, which are the central banks, the Eurosystem, the European Central Bank. We have our reasons why we started with this project. Then there are customers, physical persons, the citizens of the third part of participants, they are the merchants, and the fourth, they are the payment services providers, legal banks. Each of these group has the different position. I try simply from the beginning for the discussion express that clear winner of this project are the merchants, They will have better service, they will have less expenses, they will have better service. Second one, which is clearly winner are the customers, the citizens of the area, from our point of view. And to use the question, the threat, we do not cash that don't take any secret that in this good or bad. The banks themselves really they have some concerns. They it's fair that they have some suspicious or it is not concerning this project big words. The banks, the commercial banks, and the other payment services providers, many banks, they are friends. They are the second part of the two-tier banking system in Europe we have. And of course, the central banks don't want to destroy our partners. We sometimes speak out or express that this digital project we would like to be successful, but on the other hand, not too successful to destroy the commercial banks. Of course, we would not like that people simply change their current accounts or the accounts of the digital, because that will destroy the course, destroy the liquidity management and the position of the commercial bank. That's why it's a long and serious discussion about how to avoid this threat for our partners, for the distributors, for the first contact places, and of the digital world, and so that's their consciousness. What is clear now is that digital world will not be remunerated, it will not be any interest at all, any interest like cash. Second one, it will not be programmable. We will never ask that there are some areas on which you can use the digital world. It's other form of cash. It's simply. It's not other measure which is important. They are holding limits. It exists some figure, and it was in the very beginning of the project. It's in the air, 3,000 euros, but it came from the essentially investigated. It came from Germany. It's not really any existing limit. The discussion about the holding limits is still on the table. We know that it has to be set by authorities, by the European Central Bank or the Eurosystem itself. The final figure is not decided yet. One of the ideas which exists, and I am supporter of this idea, is that ECB will set some upper limit, and every provider can set his own time factor way for about digital limits. We have to keep in mind that the digital euro is a product, is a combination of cash and the payment card account for allowing you to make the e-commerce payments. And I think that nobody in this world has seen his wallet 3,000 euros. Perhaps of it, it's the cash itself. On the other hand, everybody in this room has the payment card, which some limit, which exceeds several thousands. And we have to find some combination of these approaches to set the thing correctly, not to destroy the position of banks. On the one hand, and on the other hand, allow users of digital euro have at least the same comfort as they have today with payment cards. That's it.
I have one follow-up question there regarding the limits. The limit is as low as 3,000. It means I can't buy air tickets for me and my family if going on holiday using my digital euros. So that will not be as convenient as paying by card in this sense. Or we could have to pull me and my wife's and possibly daughters' digital euro wallets to be able to buy those air tickets.
Well, digital euro has even now several agreed and accepted features, and one of them is the waterfall and the reverse waterfall. Waterfall means that if you have some limit, let's say from this, not to repeat the figure, let's say 1,000 euros, if you receive a payment which exceeds the limit, it will be automatically transferred to a parent account. Yes, it's the option. Vice versa, the reverse waterfall means that you can take the liquidity from your current account to fulfill your account of the digital euro. And for me, is a challenge for the fintech companies to offer some product which will immediately fulfill your account with the digital euro, and you can pay even bigger sums.
Right.
It depends on the service, the payment services provider, on the solution we will ask. It's the field for innovations.
So thank you, Dusan Jurček. That's a very good answer. And I will leave the word to Aniko Sombate from the Central Bank of Hungary. We start with the central bankers. Now, you represent the central bank outside the euro system. How do you see on the benefits of a digital euro? What can it do for countries outside the eurozone? Will it have any impact, or will Hungary make a digital forint, or how do you see the future?
So that's true, and welcome again to everyone. In the calendar, I would like to start by actually disagreeing with my colleague Dusan, and I think that the digital euro is really a revolution because there's no other major economic area has ever decided to introduce a central digital currency and roll out it fully. So not even the people, the Bank of China has made such a decision yet, even though they have started exploring the possibility that in 2013. And I think I immediately are okay. So it could really be a revolution, and I would just like to recall that in the past weeks, Canada and Australia announced that they stop researching cybersecurity digital currency issues, and they focus the further attention to further payment that improve topics, because they don't see that the retail CBDC would be needed in the country and so on. But my second point would be that also connecting with what I was said about the main stakeholders. So in an application that can look at the 21, when introducing a design framework for the central and digital currency, we identified that countries might introduce these instruments either because they face some real clear-cut market failures on the payment infrastructure, or because they have some very strong policy or strategic interest in doing so. And so if we look at why the ECB and the related central banks are introducing the digital euro, it's quite rather because of strategic directions. So to remain relevant and digital in the 21st century, to maintain monetary sovereignty, and also to have one integrated payment infrastructure, which is about to be created parallelly also in the form of instant payment system soon. So that these are strategic motivations, and if you have these in mind, you have to be really clear about the design and how to convince all the stakeholders and how to set specific incentives for them to make the project a success and to support adoption. So clearly, I think it was quite obvious from the beginning that banks will not be such supporters of the idea, and I think there should be further incentives and constant communication at all sides. So for the customers, for the merchants, for the banks, to clarify how it will work, what will be the price of it, how safe it will be. And of course, we from Hungary are supporting this endeavor, so we want the digital euro to become a success. Right now, the files are in the hands of the Hungarian presidency, and we want to hand it over with great progress. So we are, of course, following closely the happenings, and just referring back to the limits, we are also keen to know the sooner the better what holding limits Hungarians will have in the form of visitor limits, which are supposed to be even lower than the ordinary holding limits for Eurozone citizens. And this is also a question whether and how a European citizen would be differentiated in terms of the access to the digital euro and the price they are paying for having a digital euro within the Eurozone and outside of the Eurozone. Thank you.
Thank you, Anniko. Good to hear Hungary's point of view. I will move over to Peter Paulus online, head of the financial department representation of Slovakia in the European Union. Peter, are you there?
Thank you, Ron. Thank you very much.
Pleased to have you on board. I have one very specific question, and I want to speak freely as well. What can the digital euro do for Slovakia specifically? And I'm thinking about the fact that in Slovakia there are still lots of people who are unbanked. So from that perspective.
I will now be my introduction also to this on.
Of course.
Thank you very much. Again, good morning to everyone. And let me also catering or organizing this year and this privileged part of this panel. In my introduction, and I will also try to answer your questions, I would like to concentrate on three items. First one, I would like to I give the question if there is a case for reduced value in Germany. Secondly, I would like to focus on the state of the art, where we are in the possibility to introduce digital euro. In my last part, I would like to concentrate on main challenges, the main points which are used based. So let me start with the first point. So if there is a case for digital euro, in general, and I think it's a very almost all of us, the key economic challenge for the EU is that we are lagging behind the US, lagging behind the China, or how is it called recently by Mr. Draghi, we are in so-called state of slow agony. So we need to improve on the demands, especially we need to focus on better. And after 30 years of the establishment of our single market and almost 25 years after the introduction of euro, we don't have a European digital mean of payment in all the euro area members. It's somehow very close. I think and now currently almost 17% transactions are made by non-European actors. And in 13 member states, from banking to the Eurozone, including Slovakia, here is a partial answer to your question, we are fully relying on third country providers. And given that, let's say the huge fragmentation based on in the payment market within the Eurozone, and also, let's say the historical context, it's hard as the way also the added solution could be the answer. So it's the case for digital Europe. Global digital Europe could somehow combine two aspects or two of our ambitions. When it's come to the future, the digitalization, it's going to promote the digitalization, needs to be a, let's say, catalyst for the digitalization. And secondly, it can enable us better use our single market, so with benefits from the economy of scale. Secondly, when it comes to the state of the art, where we are, the framework, which consists of two legislative proposals, the legal framework for the law and the legal tender case, in an ordinary legislative procedure. So they are discussed within the council and all member states, and on the other side, they are also discussing in the parliament. And on the council side, and here I can also anecdote that we are making progress, technical discussions are ongoing. In my view, should be able to come for a common or council position next year. I need to say that in the package approach of the combination, we are discussing both of these legislative proposals together. On the European Parliament, they have split this proposal. They are quite advanced when it comes to the legal tender case, but they are quite hesitant on the legal framework for digital Europe. So now we will see how the new Parliament will address this. And then they also mentioned that next year they would still be able to come for where Parliament position. So from this perspective, I mentioned that they have 2026 in the dialogues, and we may be able to come to the agreement within the EU. And saying this, this means that the earliest possible for the digital interactions 2027, of course, it will be in the end final decision making. There is a European set government. So that's the framework is in place, but we have to be set government inside when. And then here I can say that what we are trying to go here in Europe is to prepare where the means announced. And in my turn, the part I like to concentrate on the let's say main open issues and the main let's say policy objectives. When it comes to if I just start with the digital, the open issues. I was already mentioned, these are the old agreements, because on as Lucia mentioned, on one side the government successful but not so successful, and we need to also preserve this, the so-called good banking system. So nobody wants to lose the digital euro, and it was the stability of our banking system. On the other hand, something that is very much into the attractiveness of it. And we also begin to find the, let's say, balance here, which also point to question. So I may imagine it will be sent by the regulation, it will be not, but in the central bank, I can imagine that some flexibility will be needed, as the possibility to establish a corridor, you to be out to the central bank to between these boundaries. So that's the first. The second one is the question of number of wallets. If you can just one wallet or you can more wallets, but still up to the biggest amounts or cell. This is technically quite challenging. The third point is the question if we will have a ping bank or there will be a run wallet. For instance, if the let's say offline transaction will be there from the one or not. So there's also a question, and there are discussion on this. The fourth point is technology. Here we are making of course on the enrage on the European Central Banks on the ambition of persons to have a future of, let's say, technology and still somehow moving target that gets down to our discussion. And last, let's say the main issue which we are facing the question of privacy. And I said in principle already last time, privacy doesn't mean anonymity. So how to balance on one side privacy, which in my understanding means the ability to control when and how your personal information are released with the anonymity, Gmail understand being this, the possibility to connect your identity with the action you need. And this is very important, especially when it comes to anti-money laundering, to instead of financial nature. And of course, there are other issues like this is something completely also programming for in some dominoes of countries access to norms are what. The third countries access to society, role of the intermediaries, etc. And when it comes to the policy objectives, which we had, I think it's very important to always admit that the discussion of employment prepares. It will be mean of payment, not being with an interest, etc. Secondly, it will be the use will be on voluntary basis, so that the question to make use of digital development, and more of the status of the cash will be increased or improved by the regulation. Thirdly, I think this also one of the biggest advantages of the privacy. I think with some people can be a message for others see the goal and actually is important how important it is in only this, and this is also what to include toward somehow what you mentioned in the beginning, that all part of the society can benefit from the production of the digital development. And last but not least is interoperability. So the ambition of the digital development is to be able to get into other, let's say, like CBDC development in the world. And here, the EU to make use of the just movement, or let's say, advantage. Again, additional, let's say, what we started acting out, they are clear, like non-programmability, or the intention to make use of talent, the hard, so, and then simple. And hand, I think things like breaking direction.
Thank you, Peter Pavlos. It's a very good overview of the digital euro. The next speaker will be Mikuláš Peksa, Czech Republic, former member of the European Parliament. And I have one specific question for him, as well as that he's allowed to speak freely for a few minutes. Do you think we will see the digital euro in action before the end of this decade?
Okay, thanks for the introduction. Maybe before going to your question, I will ask you more comments. First, one disclaimer now. I used to be an elected politician, and as you know, in the democracy, people have different opinions, which means as I was elected politician, I was elected to represent particular opinions. As a young member of either party, it should be noted that in this discussion I might be closer to the interests of consumers or small enterprises, but I have to unfortunately disclaim that if you represent the big bank, I'm probably not exactly the type of position you expect to or you want to participate in this debate, but that's the way how the life works. Maybe I will start with the discussion where it's opportunity to try, because this is exactly the time for question for discussion. As is usual discussing and now not interview literally with some not trained economists in the basic classes of business management schools. Basically analyze the opportunities, strengths, and weaknesses. Well, I think both of them. Certainly there are strengths or opportunities, because the digital creates a huge opportunity to actually use a particular small promises. I mean, the current payment systems are almost by design introducing some sort of transaction fees. Sounds maybe as a margin application for somebody, but when you run a business which is very much using low margins and send that compensating using high turnover, then you start feeling that these transaction fees can be completely like dramatic or harming to your interests. This is I would say that these type of margins are the main winners for the case that the digital euro will be introduced, because whatever you run
could it be grocery, could it be like light shop or tobacco shop? This type of people might eat it. For them, it could make really like a breakthrough because they really so far had not really had the same opportunity to enter into the digital economy. I mean, like what we use for payments is it banknotes, is it coins. They are not introducing any transaction fees. But whenever you come to the merchant and pay by card, naturally some part of the profit the merchant goes to the operator of the payment system. So from my point of view, this could be a huge opportunity to boost these small enterprises and build in addition to the whole economy, and certainly boost the European economy in the sense that most of these small enterprises are located here, whereas the payment systems are located overseas. On the other hand, this, as much as this is this are the opportunities, there are some threats and should be noted. It was previously mentioned in the context of privacy. I would like to stress this one a lot. I mean, like, I'm not really like economist. I started on trade businesses, and now I work more as a software engineer. So, what should be noted is that unlike the main groups or coins, the digital euro naturally has sort of like a tag in it. I mean, like, I give to my colleague, I count there's like no report about the transaction unless reported somewhere. For the digital euro, it can be by its nature, or it has to be by its nature, recorded in some digital hours. And what shall be stressed that actually nowadays we are moving through a big revolution. I mean, like, without artificial intelligence is penetrating everywhere, every sector, every skill of life. What's important there is the fact that artificial intelligence is in fact just a smart way to statistically analyze the data. It's not mentioned just like statistical analysis. So you need a huge amount of data, and digital euro by its nature, any central bank issued currency has the same type of bullets or bytes and local data that can be analyzed and reminded that can be used. From that point of view, it's really important how we actually adjust the digital euro, because as it was said previously, it's so quick a pilot project, like nobody else has really done before. Even the Chinese, they to pay months. But there is really like the threat that if you do it in a full way, because it set the standard for set the global standard for privacy in a way that it will really be rather a tool for like authoritarian regimes of that who actually spy on their citizens, which I believe would apply. But still, this could be avoided, and it's very much in technical discussion. I mean, like, I have been participating in the interaction with the European CIDs, things like detox. Well, the stand-up was very much, the discussion was very much technical, and it was very much the question, like, we'll handle it, we collect from here for them for retail and so on. This type of discussion will happen when it comes to the digital world and will be the so very key. And I think this will not be over unless you will know the exact specification of the information exchange protocol or data exchange protocols that are connected to the digital world. Which brings me to the last to the question about the timeline. I mean, currently the CB is actually like issued, finished multiple big tenders will actually provide this a detailed description, or I think the description how the digital world should look like. So the timeline now is that the wings of the tenders should provide its first results at any time of instance. So at instance we will have like the description of how the data shall be exchanged, and this makes time for a ECB to decide. I hope it will be possible to use standards, and that is in some way there's some practical fidelity statement in also. When it comes to other questions, like for example the patching of offline payments, I'm not really confident this is possible to deliver as it was described by the CEO. And actually, I have friends among the mathematicians who believe it is mathematically impossible to deliver the way our CB expects to deliver. So from that point of view, I'm a bit skeptical when it comes to redefine payments. I believe in 2026 we will be facing an interesting challenge whether we actually go for, let's say, privacy or like more privacy-oriented growth, or whether we go for straightforward approaches boosting our economy. This will be very political question is to be decided by the CB. But I guess it's very likely that it will be at the end of the day supported, and we will end up in having digital euro in this decade.
Thank you, Nicholas Beksa. Now we move over to Lucas Komanda, Czech Republic, Chief Economist at Trinity Bank. So what do the banking industry, in this case in Czech Republic, think of a digital euro? Opportunities, threats to your bank and banks in general?
Thank you very much for inviting me to this session. I'm representing here Czech Bank, Trinity Bank. We are an inside bank, Czech sphere, the Czech bank industry. And I am a big supporter of fintech. Previously, I worked as a chief economist, of Rockland, a financial company, which is a pioneer of fintech in the Czech Republic. So I'm a big fan of many new technologies in financial industry. I am convinced that they are helping a lot to really shift this industry towards new goals and new bright future. But when one comes to the issue of digital currency, I do not see any real benefits for ordinary people. Okay, there may be some benefits for merchants, but I don't see that as really significant. So in my eyes, I see digital euro more as a threat for the future of not just financial industry, but for society as a whole. And that's because it would give too much power to the hand of central bank, and because of that, to the hand of state. Because in the end, any central bank is a part of state government, even though, of course, especially in the countries that are economically developed, there is a high degree of independence of some of the bank on state, but these institutions are created by the state, and they have kind of the privilege guaranteed by the state to issue, create money. And that's, I think, the key issue here, because once we are in the world of digital euro, digital currency, digital Czech crowns, digital forints, digital Polish zloty, and so on, we are facing a completely new environment where central banks really are much more powerful players than they are in today's world. And I see digital currency as a first really important step towards the getting rid of cash as such, meaning physical cash, banknotes and coins. Because of course there will be, in coming years or years after the introduction of digital euro, there will be pressure, for example, from the side of state or central bank to really abolish cash. And again, this is in my eyes something that's harmful for society as a whole because of the pain risk that once we are once we are abolished cash or we are living without cash, we are more under the influence of authorities, like state and something because digital currency is something that we already have now. We have electronic money already now. I guess all of you are paying every day with your mobile phone or with your credit debit card or your watches maybe, and so we already have it. So I don't see any major benefit for an ordinary citizen. Major beneficiary of the digital currencies, monetary or the state, is central bank, and not just because of reason that was already mentioned that in the world of digital currency, every transaction has its digital track, because you have a digital track record, which is not so much with cash, with banknotes, with coins. So this is first thing, and the next big benefit for central banks is that they do their monetary policy easier to do. Because of course then without banknotes, without coins, for a central bank it would be easier to set negative interest rates, very high interest rates, basically a tax a customer's savings, and it was a big debate the last decade about so-called zero level bound, that many economists wrote studies and analyses about how a behavior of macroeconomic system and consumers and merchants changes at this level, zero level bound, because of course when there will be an effort from the banking industry to set really deep interest rates in negative area, meaning minus 10%, minus 20% per annum, because of, for example, a need to fight deflation, which of course not the major threat today for central banking, our central banks, for monetary authorities, but it may be again in the future. For example, China has been fighting deflation right now, so we may see it even though currently the major threat in this field is inflation. But to fight inflation, of course, it would be much easier for central banks to have a world to have financial industry without cash, without banknotes, without coins, because then it's possible to set minus 20 annual interest rates, and people cannot do nothing with that, because of course nowadays when there is cash, there's cash, there are banknotes, there are coins, they may take their savings, their deposits from a bank, and they are bank with, and you put it under the mattress, and without cash, it's not possible, of course. So they are allowed the ordinary customers to build this in the world of digital euro, and I know that European Central Bank claim that a digital euro is not received as a way to get rid of cash, but I still see it as a first step in this direction, and in direction of something like, for example, social credits and so on, because with digital currencies, the government, the state, central bank have a much easier life to really track not just your transactions, but basically for your life. So this is something like a big brother story. And when I compare these potential negatives with benefits, really, even though there are benefits, but some of them are already mentioned, I do not see it simply the benefits so big related to each term than even the simple good shopping. And so my conclusion on this is that there is no need to introduce digital currency, be digital currency, and your digital check round or any other.
That's it.
Thank you very much for your point of view. I have maybe two follow-up questions here. I can see that the euro can be a protection against a dollar bond because it's a zero interest, like cash and coins. While you have your money in the current account in the bank, and the central bank have a negative interest, the bank will give you a negative interest. Here I have my money in my wallet, it's unprotected against negative interest, is the opposite. That's the first question. And the second, I would like to agree with you a little bit. Most of us consumers, we like to pay with our cards, we don't really see any disadvantages. Most of us pay with credit cards, we get some benefits on the expense of the merchants. We get travel insurance, we get access to airport lounges, and all kind of fringes and benefits. And as consumers, we like this. We would lose it with the digital euro. But that could have been made up by possibly lower prices due to lower transaction costs. And it wouldn't just benefit the few or high consumers on their more exclusive credit cards. So it is a little bit of a democratization in the idea of the digital euro. You have 2 minutes of comment, please.
As I said, I do not see the benefits for merchants or for customers as important. I think that current system of electronic money created by your own bank, because currently we have electronic money already, as I said, but these are created by your own bank, be it Raiffeisen Bank, be it just Gastgeldern, Slovak, and so on and so on. So this money is created by a bank or a company who has banking license to do that. So where is the benefit? Where is the additional value, the value added for an ordinary citizen? I simply don't see it as big compared to trade. And of course, as I said again, the European Central Bank claim that digital euro is not a way how to get rid of cash, that these two types of currency are complementary. But it's just the initial saying. I change after 5 years or 10 years of digital currency. After the digital currency introduction, it's not set in the stone. So again, this is for me too big risk and too little benefits.
Thank you so much. I appreciate that you stick out your neck here among central bankers and the representatives of the European Union. Our last speaker is Petr Ivanka, account manager of Softec. And you're working in the fintech industry, as I understand it. So what challenges do you see from a fintech perspective with the digital central bank backed euro?
Good morning, ladies and gentlemen. As an IT vendor, that we are delivering IT solutions for the banking, insurance segments, also telecommunication.
I would like to go to the first of the question, what is the benefit of the digital euro is we can see the infrastructure of the digital euro should bring instant payments, without instant payments for some type of transactions, but still the instant payments are not used at all. So this is an opportunity to bring instant payments for all the banks and also the cross-border payments, which are now quite expensive and are slow. So digital paying its infrastructure is based on, for example, system like TIPS, instant payment settlement. It could bring instant payments, and this will be a opportunity for the customers to have instant payments, and the payments will be really fast, and you can bring your money from one accounts to another in 10 seconds, or from the e-wallet. Then we are talking about digital euro, and where we can, as a fintech or IT companies, where we can see our opportunity. There is let's say some concerns about the cyber attacks, for example, about the security of the infrastructure, and this is where the fintechs can bring their added value. They can reinforce or strengthen, let's say, the security of the system. They can bring new solution where it was discussed that there will be a two-tier system. Then central bank will be issuing the digital euro, and the digital euro will manage also to give the commercial banks trouble to end. And when you would like to open your current account or e-wallet, you should authenticate somehow. The bank needs to verify your identity, and here can come as fintechs, for example, using technologies like facial biometry, and it's already used also in this Central Europe area, where it is possible to open your current account or even take a loan through your mobile phone, and use your facial biometric to authenticate yourself. And this using of these technologies could make it easier, and also to strengthen the security as the system. As I can see, one example of the opportunity to reinforce the infrastructure.
Thank you so much, Peter Paulos. And now I'll give the word back to Dusan Jurčak from the Slovak Central Bank, because I'm sure you have something, so interesting replies here from the central bank's perspective.
Thank you. As was expected, this is a discussion. This is not a meeting of the Communist Party that I can only people agree with what is proposed. First of all, I was picked by some sentences, but was exactly question. Too much power to the central banks. Can you remember any measure about reducing the usage of cash which came from central bank? It was always from the ministries of finance. It was always from the government, because it was motivated by the tax reasons, not by the reducing of the cash motivated by the central banks. The issue of cash is helping within the seigniorage, within the seigniorage of cash. It's our aim. It's not our aim to reduce the cash, but the cash dealing in the society. The young generation do not use the cash at all. The cash is used less and less, because the digital means of payments are much more convenient. As this was mentioned, absolutely from the opposite point of view, in like that you think it is losing. The digital euro is only other form of cash, or an other form of cash. 100, 200 years ago, all the people and make street coins, and everybody believes that, well, if I grab gold or on the golden coin, you will be protected forever. The first banknotes were banknotes in Austria was what were counted for, but now nobody is paying 1,000 euros in coins. We accepted the paper money. It was other form. It was useful. It was at the time when it came, it was convenient for the people. And now we are in the time when digital means of payments are more welcome by the general public. We have there are two forms of currency everybody knows it. Public money and what you create it in commercial banks, it's and the settlement of every trade is always in general public. The settlement of trade with gold is made in universal dollars. And then you explain or you show the price of gold in euros, and not the euro, how much gold it equals. Then I see the cryptocurrencies. The price of Bitcoin is expressed in US dollars, not vice versa. You can use it, of course, you can use it as a means of payment when the counterparty accepts. If not, you have to use the public money. Too much power for central banks. I'm afraid from more to give too much power to big tech, to big technology companies. If we will lose our payment systems and we will use only the big tech companies, they have some things. If they increase the fee for their services, it will immediately influence the price of every service, every good we are buying. It will increase the inflation. How can then central banks guarantee the stability of the currency if the inflation is increased by somebody else immediately? What was said that cash protect the privacy, or cash protect the value of goods, of wealth, the wealth of your family. And the good thing, we feel that cash is not that luxury. Remember the last monetary reform in Czechoslovakia? Today we use it sharply, immediately. The cash you keep at home, objective, not so much specific. If you think that the central bank will reduce 1/10 or spend of the volume of the accounts, and it's easy. It is as well easy to say that from tomorrow, every sum of the hundred of the banknote we chose, let's say 7, is no more valid. And the same. But the cash is only some mean of payment, some mean of wealth, which is issued by the central authority and protected. The central authority. Here in Slovakia, we abolished the 1 cent and 2 cent coins. I think hard. Because as well, I think the problem with cash is not that we would like in central bank or in use, and it is used and defined with this define reducing. But just now we have two kinds. We have the wholesale, the central bank money, which are bigger reserves from the banks, came with central banks, and coins and banknotes in the general public. Yes? and try to imagine that in some years nobody will use the cash. We keep the same proportion between public money and private money, central bank money, and the money created by the commercial banks. They will have to increase their own trade reserves. That's it. And we think that keep the retail currency in other form is the good reason, because it has several advantages. I touched the merchants. The merchants have the costs. They have the fee pay for good use of the payment goods. The fee is composed from several components. One of the important components of the final fee is the scheme. The scheme fee we offer will be in charge. It be as the Euro system will offer the infrastructure free of charge. It's clear that it will reduce the total fee for the merchants. It's one thing. Second one, when the merchants receive the real liquidity, when you are paying with the card, you receive the service or the goods, and the merchant will receive more liquidity in 7 days. With the digital euro, we offer instant payment. They will receive it immediately, time and cost. That's a clear advantages for the merchant, so I'm sure. I would not like to bore you too much, so I try to say something more technical. I insist on the word, not to use the word revolution. I grew up in the bygone times, in the times of permanent revolution. Revolution for me is something like destroying the Bastille or shooting from Aurora, and we are not making the revolution. Please, when we are speaking that first possible date of issuing the digital euro is in several years, what kind of revolution is it when it takes several years? Absolutely opposite. We discuss every simple question. We are making this project like heavy machinery making the road. It's going unbelievable.
Continent, Berlin. It's one up his side.
Sorry. Thank you. Unbelievable story. But very, very in detail, we discuss with every market stakeholder, and we discuss every simple question to be prepared as good. And with this new form of Cyprus cash, like we are now in the existing world. Last thing, I'm surprised that website got offline payments that they are not technically possible. To discuss it later. I mean, it becomes possible. It is some form. Of course, I did not tell some details that the digital transaction is absolutely signal. It was possible. But we can use, and we are prepared to use the measures to make it as private, as secret as it is possible. To use the absolutely up-to-date form of anonymization of the transaction. And what I can say, I'm so sure of it. We and the central banks, we have really no interest in seeing the transaction, the habits. It's more the interest of the private vendors or suppliers, not the central bank. I can promise them I help. I will not mistake. But if you will use the digital, you will not immediately after every payment, you will not immediately receive 10 amps. We are not selling the data, so the data are with the payment services providers, not with the central banks. We simply would like to keep the amount of cash and circulation, and this is other form of cash. What's into it? Main of frame. Why do you need it?
Thank you, Dusan. A quick reply from Lucas Comanda, I think, is warranted for, and then I would like to move on with Peter Paulus.
So thank you for the reply. I have to say that, of course, in some countries, for example, Sweden, you have decline in volume of cash. But in many other countries, even developed countries, it's not true that cash is declining. For example, in Germany, in Czech Republic even, the volume of cash has been rising because simply growing economy. So that's not true that there is a decline of cash. Just look to the Germany, how Germans still love cash transaction. Coins, banknotes, I do not see that cash there is really before extinction. Again, I'm asking, what's the benefit of this digital euro? For merchants, you are using currently strongly competitive payment systems done by private sector. There is competitive pressure amongst financial services providers, big card companies. There is competitive pressure amongst banks, be it domestic banks and international banks. In the moment when they are this digital currency, there is no such a pressure because the monopoly of state or central bank will get another source of power. And that's the reason why I claim that with digital currency there is an increase, not decrease, of the power that state or government or central bank may exert on our lives. And still, because of that, again, that's my key message today, is that really there is no big benefit for us as customers, for merchants, that would compensate for this potential threat. And that's not true that digital euro is like cash. It isn't. Again, there has been big debate last decade about zero-hour bound, and many economists then argue that it would be much easier go with interest rates deep into negative area when there is no cash. So this is not true that it is just like cash. It's a revolution. It's a revolution. And it's a revolution because we are losing cash, actually, and we are losing a financial system when you can do transaction without third party knowing about it. Once we are only digital currencies, be it private or public, but still electronic in any case, there is no such privacy, because every transaction that will be traceable with its digital track record, and I do not see it necessary.
I have one quick comment. So, in that case, digital euro will come according to your vision and will fail miserably because nobody needs it, there's no need for it. So, it will be self-explanatory if you're right or wrong in the future.
Once we are in a position where when nobody is using cash, like physical coins and I have no problem with with going into the world. I have no problem with it. But we are way far from that point at the time. So let's wait till Lisbon. And I already said about Germany, for example, there is no sign of extinction of cash. It may be the case in Sweden or in few other countries, but it's not. Look at Japan, or even in Japan, they are loving their cash.
That is true, but if you go to China, you can't pay with cash.
And you would really want to be like in China?
Or if you go to Sweden, you can't pay with cash.
Potentially with social credits? Because this is the first step to social credits. I don't see that happening in Sweden, because once you have your money under the control of state, completely without competitive pressure from competition on banks, there is a step forward towards even social credits.
I shouldn't argue.
I should imagine China will be one
I'm
of
very happy to take the word institution here instead.
Very short. This Germans, we investigated the amount of passion, and it depends how we are looking to the question of using cash. If you investigate the persons, then you like to. Everybody will say that, well, I'm not using cash because it was a criminal, but they use it. Investigating the persons will give you false results. What are not false results are data, how much cash is issued in the country. It's true that in Germany it's issued far more than the so-called king. It's one of the countries which issue more cash than in the Euro system is the cut. But when we are investigating it, I would like to say that the Germans pay only in cash to avoid paying taxes and so on. What we mean is that the cash ends in the non-Europe countries. That's why we are issuing more and more cash, and it is not used, not all the issued cash is used in Germany, Slovakia, or Austria. A lot of Europeans used to make the holidays world, and all feel know very well that they will receive some advantage in, let's say, Turkey when you're paying the cash expedition. What's in Turkey, in Zanzibar, and it's part of the cash we just issued. You can't this part pay is a proof that cash is going on increasing. In fact, it's not figures to us others. What you said, what you asked, what's the advantage as a citizen of Eurozone? It is not so seen here in Slovakia. For example, here you can use the Visa or Master. But it is not as in France or in other countries. You have to look in the restaurant, do they accept my card or Korean? If you will have digital rules, it's Korean, and you accept. That's something which is not still here. Here, it's not very welcome, but we have a lot of countries use payment systems. Capitalism. Then the domestic card schemes, the local card schemes, it's not yet there do not exist a pan-European card scheme.
That is better for consumer because there is competitive pressure because of many players, be it in France, even the Czech Republic, we have two players, the big car companies. There are more of them, of course, but they are bringing up new services because they're competition. So finally, even though there are some very small, almost negligible fees, so the pressure of competition has been pressuring the prices for pensions for customers lower. And once you create monopoly, doesn't it there will be this disadvantage of competition because there will be no more competition.
We create only free of charge.
And it's but there are other negatives. I will mention that. Of course, for U.S. central banks, it's great because then you made you, and it's the basic goal of this because then it's easier for you to set interest rates as you wish. Yeah, because this is the first step towards getting rid of tension.
But it is not committed, right? If you don't set any interest, you can simply close your digital account and take cash.
Currently, yes, but sometimes there will be 3, 4, 5, 10 years with parallel existence of cash, like banknotes and funds, and digital euro. But after this interim period, there will be only digital euro. You would say as ECB that why we should use banknotes and coins. So we have already digital euro, digital cash, so we don't need it.
Because you want a 100,000, so easy digital no. Rather now we can't pay so easily. It's really full of edge. And we would like to have
It's not a form of cash. It's not a form of cash. It's kind of hybrid between electronic money. We already have private money. We already have it. Our banks, and between cash in the hands of the issuer, because the issuer is central bank. So it's digital money issued by central banks. Currently, you do not have any of it. You do not have any money in electronic form that is issued by central bank. And it's a huge change in my eyes, potentially leading central banks to much easier life with their monetary policy. And this monetary policy, I think, and I'm convinced, is not always benefiting ordinary customer, because there is a threat of, for example, this tax on savings in form of deep negative interest rate. Yeah, there is this threat.
It don't want use interest rates on digital account. It depends on the legislation, and the legislation will say something.
Yeah.
It's not in the hands of the once the legislation will stating that digital account is not being interest. The ECB can't simply say, well, we only will give that minds. That's not so much.
Yeah, and this is
It's not an
initial step, of course. But still, the reason is clear, because still we have cash in physical form. Why? Well, once we do not have that anymore, banknotes and coins, it will be perfectly easy for you to introduce completely negative interest rates, very high interest rates in negative area.
And it's going to be with lesson.
So, yeah,
It's not.
I see there's a threat, and yeah, but still, it's threat for me, and I do not see benefits of it. Still, there are some small savings for merchants, but they are very negligible.
We are not really getting anywhere here, so I think we drop this part of the discussion now. I would just say my point of view as a neutral moderator here, that is, if I'm risking negative interest on my digital euros, I would hold digital euros, so they would fail miserably. I would buy real assets where everything says liquidity. So I would hold that. That's what I'm saying. If I don't trust it, I don't hold it. If I don't trust paper euros, I don't hold paper euros. If I don't trust having money in the bank, I won't having money in the bank.
But with no paper money, you don't have any option other than to hold digital currency with steep negative interest rates. That's my point.
If I'm risking a steep negative interest rate, why would I buy gold or stocks or any other assets?
Your only alternative would be to go, of course, to Bitcoin,
Dollars.
but there are just read a new paper from this about Bitcoin. It may be also the case that Bitcoins are not held anymore.
So they're saying that if we're risking our savings by holding these on euros, they won't hold them in the fail. That's my personal opinion. But now we're going to
All the debate last decade was about how to make it easier for a central bank to go deeper into interest rates deeper. Yes, that inflation fighting. Have you read any studies?
yes, that was
About zero lower bound?
yes, of course I have, and I think we learned our lesson from the zero lower bound in a quite harsh way, and I think that's a territory we rather don't explore again.
Current state is that central banks cannot go -1, -2, -3, -4, even though from the point of view of fighting deflation, it would be more effective for them. But still, currently, it's not possible because of the fact that there is still physical cash, and people would do a run on eBay and would take a cash out of it.
Yes.
And then for them it's better to have zero interest rates, rolling money under the mattress, their room, and to have it in bank. And with digital currencies, just digital currencies, this is not possible anymore. That's major threat.
I believe the word to make was action.
Yeah, it's separate. Johnson, if I may react on this, if you are afraid that for which euros count for whatever one of that currency will be subject of negative interest rates in trying to bank any other bank, just take your money and buy Bitcoins. It's a safe solution as long as there is the internet, as long as the computers run kind of like speed, like saying the blockchain. Can connect to each other and exchange the information, keep the blockchain integral. You are safe. Nobody can prevent you from molding that as long as the cryptographic works and as long as there is as long as the mathematics works and there is no major breakthroughs involved computing, your Bitcoins are safe. So if you are afraid of any currency that you lose its value, just buy Bitcoins and it'll be fine.
I completely agree with that. I completely agree. I am a supporter. No, I am supporter of Bitcoins, and I'm just very surprised that a member of central banks has been recommending us to hold Bitcoins to have.
I simply said that it's not only
You assumed to agree. You assumed to agree with.
I read several times that I developed some.
So what's in your rivals the way how to prevent our savings from the euro? What's your recommendation?
My recommendation is that if all the central banks imagine all such things, really be so awful that they will like to destroy your savings.
They must do that because there's your obligation to fight inflation, to fight for price stability. It's their mandatory obligation.
Okay, as I said, we don't get anywhere in this discussion right now. And it's now the time to round it off. So we have like 5 minutes left and then a few minutes more for questions. So I would like Peter Palos, as the head of financial department representation of Slovakia in the EU, to have the final words here. The floor is yours.
Thank you very much, Tewan, and I will back in period. But nevertheless, I will have focus take on the viewpoint. Privacy, business with data, sharing data and starters. As all of us know, one of the largest selling data to governments are by banking cards issuers. So when we are speaking of privacy, we need to take also this into our consideration, and then this will be also relevant for the banks. Second, acceptance of cash. This is something when the legislators have the intention to bring a meeting. So therefore, there is also a separate legislation using that. The motivation is to go with different further and to monitor the acceptance. And here I need to say, because sometimes the people probably the reactions of banks, because they are speaking of sending cases that when it's come to the very broad. This is how it just arise like frozen versus some. They like use they abuse they abuse the networks and etc. So this is something of course which is also impacting, let's say, the behavior in our societies. So this is also something we should consider in our discussion. And third point is about the role of the issue. And I think it's quite clear that I mentioned in the introduction that firstly the framework conditions will be set. And that's the possibility of the ECB to decide. So it's not it's as a policymaker and let's say right balance. And this includes also the intention not to throw out let's say pirates, which therefore the intentions that use intervention and therefore there's the intention to establish when limits and it's against the platform that things let's say find the right balance that we introduce the say that each thing
Thank you, Peter. Now, do I have any questions from the audience? Somebody wants the microphone. I'm going to address any of the panelists. Nobody? No questions? Yes, perfect. Thanks.
So, what thanks. I was wondering, Arkadiusz, if you think about edge populations when it comes to digitalizing the Europe. For example, old people, kids, crime syndicates that obviously would want to go into digitalizations as we see. I'm just wondering, of course there is technological solutions to it, but I cannot think about any technological solution that if I want to give my €5 100 crowns to go to buy food after school, I cannot think about an instrument that I can give her that will be completely safe from this. So I was wondering if
But I did not mention in the aims of the digital European electronic features was the like including. I would like to see market practice on this, but the inclusion is there, and they would like to take on the board even those as those who do not have just our economy to them. The making inclusion is one of the features for digital logs. They would like to give them not of course mobile phones, but compatible with type of exported, as long as you are speaking about some kind of worst card or something. But the inclusion is one of the features.
Any more questions?
about harming with invention. They obviously will not take on with any digitalized coin mostly. But they do have a political power in some European countries. Where do you see it goes?
The word sound is the possibility. It's not obliged. They can use it, then they might to it.
I was not just last sure to let a check on representatives. If you have some information from the international value, they also consider digital power. They check, for instance, Czech Republic is not particularly inviting you to adopt Europe. Quite sometimes it is sometimes not. So I would be just interested to put out that to them.
If as I'm Czech, I would answer, to my knowledge, there is no such an initiative will go adopt an digital currency with it.
Yeah, I agree. There is no initiative. Maybe some really theoretical papers written by CMB, International Bank staff, but there are no real plans to introduce it anytime soon. And we have always certainly tried to calculate into a digital currency and introduce euro. So, and we still have big chip.
What should be noted is that the current setting of the euro is that it should not be easily for the Eurozone citizens, which means that even the Czech citizens, as in countries not like using the euro, shall be entitled to actually own wallets to store digital euros, which I think was mentioned previously by the Hungarian League. It's very important feature so that the citizens of countries who are also in the Eurozone would not be excluded from the systems. What shall we mention from the, let's say, Czech point of view? This has clearly impact on our citizens. However, the preparatory discussions for digital euro are being run through the Eurozone. So the political representatives of Czech Republic are not really part of the discussions. There are very few exceptions because somehow the digital euro is discussed also in the European Parliament where there are Czech representatives naturally. But in fact, this is what this is a way of decision making we call in Czech on us business, and that's not a bit like that.
Thank you. We have time for one more question. Anyone have any more questions? Otherwise, I will thank the panel for a fantastically interesting and heated discussion. Thank you so much.